The average person spends hundreds, if not thousands, every month on their car payment. But by changing the way in which you buy a car, you can reduce this payment by almost 50%. And so in this video, I'm going to show you how it works and how you can get a new electric car for almost half price. I'll run through 2 different ways you can buy a car, how the numbers work differently for both of those, and which one will save you the most amount of money. And finally, we will go through the other factors to take into consideration when buying a new electric car. This video is part of a series of Accountant Explained videos where we discuss all things personal finance and building wealth. To show you how it works, I'll be using the Tesla Model 3 as an example with a few additional features that no one really needs or asks for to bring the total value of the car to a round number of £50,000. To keep things simple, I'm going to assume you're buying the car outright. The first way you can buy the Tesla is through buying it outright under your personal name. So with this method, you make money or you get paid your salary, you then pay tax on that salary, and then from the amount left over, you buy your car. So using some numbers as an example, if you're an employee working for a corporation, let's say earning 75,000, you first pay your taxes on that 75 grand. So in this case, income tax and NI, which totals around 25,000, which then leaves you with just over 52,000 pounds. And from that 52,000 pounds, you buy your 50 grand Tesla. So you now have just over £2,000 left over. Then we move on to the second option. And this is where it gets interesting. And that is buying the Tesla within a company structure. This would be on the basis that you are a business owner or that you have a side hustle of some sort and you're operating as a company. So there are a lot of different benefits of operating under a company, one of being the massive amount of tax savings. I'm not going to go into the details in this video because I have a whole section of it covered in another video, and I'll link that over here for you as well. So now buying your car under a company is specifically beneficial for new electric cars because firstly, they are 100% tax deductible, which means you can write off the full price of a new car against your profits from that year. And secondly, the reason why it's beneficial is because they get a lower benefit in kind rate. And I'll explain what that means in just a moment. But first, let's look at the numbers and how it works in this scenario. So if you bought the Tesla through your company, then instead of buying the car after you pay tax, you buy the car before you pay tax. So it's using the same numbers as we did in scenario 1. Let's assume the company made £75,000. Now, if you buy your Tesla within your company, it means you can write off the full value or the full price of that car in the year that you bought it. So instead of paying corporation tax on the 75,000, you now pay tax on the 25,000. So after the 50,000 expense. This means instead of paying 16,000 in corporation tax, which is what you would have paid on the 75,000, you now pay less than 5,000. This is almost an 11 grand saving or discount, if you will, on the car. Which then leads to the question, is this really a business expense? And is it legal to write off a car from your business if you're actually using it for personal purposes or personal use? So for example, I'm here making YouTube videos. On what basis can I justify a Tesla for my business? This is where the benefit in kind comes in and why it makes so much sense to buy an electric car under a company. So benefit in kind is defined as goods and services provided to an employee for free or at a greatly reduced cost. And the government, again, sees this as some sort of payment or value to you and therefore usually imposes a tax on the value of that good or service. So for example, if your workplace pays for your health insurance, although it's free for you, you are still technically paying tax on the value of that benefit. And this is because the policy is treated as a benefit in kind. And so if this were a non-electric car and you were buying it under a company but using it for personal use, you would still have to pay a large personal benefit in kind tax. So it doesn't always make sense to buy a non-electric car within your company, as after you pay your benefit in kind amount and the other taxes, it might actually work out better off buying it under your personal name. However, it does make sense for electric cars because the benefit in kind rate is much lower. The government wants to incentivize as many people to buy clean cars. And so they've introduced different benefit in kind rates based on how energy efficient your car is. And so for something like the Tesla, it's ridiculously low. It's currently 2% of the value of the car. So 2% of the 50,000 in this case. And so that's £1,000. Every car has a benefit in kind percentage based on their CO2 emission. And I'll link the table below for you so you can see what rate applies to which car depending on the CO2 emission. So you would then be required to pay personal tax on that benefit of kind amount. So that means you'll be paying 20% if you are a basic rate taxpayer on the £1,000, or if you're a high rate taxpayer, you'd be paying 40% on that £1,000 benefit in kind amount. Once you add this benefit in kind and the Class 1A contributions to this amount, the total tax you pay between the company car and the corporation tax is just over £5,000, which means you have over 20 grand left over even after buying the car. That's a huge difference. That means with the same £75,000 in earnings, under scenario 1, you have £2,000 left over and a new Tesla. And under scenario 2, you have 20 grand left over and a new Tesla. And so essentially, given the tax savings you're getting from buying an electric car within a company, you're in a way getting the Tesla for nearly half price. That's almost 20 grand that you wouldn't otherwise have. And it's a great opportunity for you to invest in something that will instead compound over time, like stocks and shares. One of the ways I do this is by using an investment platform like Trading 212. So you can use that amount to invest in a general investing account, or even better, in a tax-free ISA account where the gains and profits are tax-free. Trading 212 has a deal at the moment where you can get 1% cash back on any amount that you deposit into your ISA. And so that's even more in savings. If you want to check it out, you can download the app or visit the link below. And if you enter the code Nischa, Nischa, you get a free share worth up to £100. It is worth noting, however, before you go and invest that 20 grand, that when you sell the car through the company, the sale price will be seen as profit. And therefore you will have to pay corporation tax on that amount, which will partly offset the tax savings, but you'd still be financially better off than you would have under option 1. So what are the other things to consider when it comes to an electric car, and can you save money in other areas? Firstly, the general maintenance costs of electric cars are lower. The car doesn't have an engine, so there are barely any maintenance or service costs at all. There's no congestion charge, there's no road tax, and the cost of charging your car is firstly lower than fuel. And also, it's 100% tax deductible. And the same goes with insurance. Insurance is a bit more expensive than it is for non-electric cars, but it's also 100% tax deductible. So although I don't always advocate buying a new car, the tax savings on buying a new electric car can really rack up. And when the price of used cars is so high at the moment, buying a new electric car and utilizing all the tax advantages that come with it may be an option to consider.
And when you factor in all of the costs you can write off, the price of the car, the charging cost, the insurance cost, the saving, depending on how much you drive, can be huge and over 50%. I've assumed you're buying the car outright, but you can also look at lease and finance options as well. And if you are looking to buy a Tesla,
then by going through my link below, you also get 1,000 free supercharge points. Hopefully this gave you some things to consider if you are on the edge of buying an electric car, if you're looking into buying one. If you found this video useful, please share it. It helps spread the awareness of financial education to more and more people. And on the topic of cars, I also have another video on whether you should buy, finance, or lease a new car. I'll leave you with that over here. Thank you so much for watching, and I'll see you there.